Well, in business news, the crude oil market appears to be fixing itself as investors brace for the OPEC meeting on June the 2nd. For the details, Africa 54 business correspondent Jill Malandrino joins us live from New York. Hi, Jill.
Biannual meeting in Vienna, and the tone sounds a bit more upbeat than it has in the past. Ministers from the United Arab Emirates and Nigeria believe that the strategy of letting low prices eradicate surplus production is working, and that accelerating demand is also helping to balance the market. Recall that oil prices have now risen over 80% since a $26 low was hit in February.
Now, do you expect any changes to emerge from this meeting?
Well, the general consensus is that OPEC will leave the current strategy in place. The key is demand is stronger than expected, helped by declining U.S. production and outages in Canada and Nigeria, particularly in the Delta. Demand in the first quarter was driven by India, and that country has now overtaken China as the main growth market for oil.
And clearly there is a change in tone in the oil market, different than we heard at the beginning of the year, right?
Right. Over the past 18 months, we've been talking about the supply glut, and now the conversation is geared towards demand and drawdowns. The IEA is forecasting an increase in demand, and Wall Street analysts like Goldman Sachs see oil stabilizing at $50 to $60 because trends appear to be getting better. My only concern is if and when oil stabilizes at higher levels, producers will turn the spigot back on in an attempt to make up for losses. So demand has to remain at strong levels. Otherwise, we run the risk of a supply glut again.
Jill, thank you very much.